Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of New York and London coffee markets.
New York coffee. Now, I apologize for this messy and complicated daily chart. I assure you that it is necessary for me to interpret where we've been, where we are now, and what the opportunities may be ahead. Okay, so the pattern construction that led to the market moving higher started in between mid-March to early May with the dark blue highlighted bullish shift pitchfork. This pitchfork is still operational with the market today in between the dark blue middle time above, currently at 267.90, and a dark blue lower time below, currently at 238.60. I'll go into further details about the very recent action shortly, but first I'd like to highlight another larger and longer term pattern. The large, bright red, April to date, breached but seemingly repaired ascending wedge pattern, currently 244.70 to 267.10. This pattern has been biding its time since late spring, including a false break higher over the middle to end of September. On the break higher up and out of the ascending wedge pattern in September, well, it seemed to be a key event back then, and I even went to depth on this for potentials topside 3 weeks ago. However, the move was not sustained, capped by the July 2011 high at 271.85, and prices have headed back down, leaving us with a mid-September to early October double top pattern, Adam and Eve type. I added 3 weeks ago when discussing the downside, and I quote, "Look to the congestion between 241.05 to 243.40, end of quote. I carried on, and I quote, "And the nearby short medium moving average currently at 250.5, and then the bright red lower time currently 244.70 of the ascending wedge pattern, with the rising medium moving average below currently at 241.80, and then the dark blue lower time of the bullish shift pitchfork currently 238.60. This dark blue lower time is the gateway to a whole load of congestion stretching from 236 down to 216.25. End of quote. Now, I may have detailed the supports below, as I have done, but the double top pattern which would test those supports has as yet not been triggered. It seems strange, but it is true. You see, the key level is the late September low at 245.90, and though prices have been below that, we have not as yet closed below, and that is the key triggering event. Personally, I'd like 2 consecutive closes, but let's leave that for the moment. So until that happens, which continues to look as if it might happen, well, it will just be a theoretical exercise. There is one other possibility that might present itself, and one that also involves the double top. It is a mid-August to date possible head and shoulders top with a split head. The split head is where the double top comes in. Now, right now, the market is possibly forming the end of the second shoulder of this pattern, and you can just about see the neckline highlighted in purple on my daily chart, and it's currently at 245.40. So you can see this is all getting very, very close to the cusp of which way and how far the market may move. Watch this market carefully. London coffee. Prices made a peak in late April and then a low in early May that set up the opportunity for me to draw 17 weeks ago a bullish Andrews pitchfork for the late February to early May action. 11 weeks ago, because of the actual market actions, I finessed this bullish Andrews pitchfork into a shallower bullish shift pitchfork with the same move, which you can see now highlighted on my daily chart in dark blue. I confess I was looking to retire it completely 5 weeks ago, given some of the market's actions. However, I kept it on due in a large part to the way the market crawled along around and on top of the upper time, currently at 50.58. Another pattern emerging from those times and highlighted in bright red on my daily chart is the late April to early September, quite large, ascending wedge pattern, currently 45.08 to 51.40. The lower uptrend has been further reinforced by the rising mauve medium moving average, currently at 45.42. Whilst the upper trend line had the benefit of being just above the dark blue upper tine. Now both the dark blue upper tine and the bright red upper trend line were briefly breached in late August, imperfectly I might add, and then properly breached 6 weeks ago, but it seemed that 3 weeks ago the breach was repaired. And there does not seem to have been a proper break on the upside on either, despite the time the market spent over both. Now going back a bit, in the first full week of August, we saw a weekly key reversal up that led to the creation of yet another pattern, an August-based bull channel, that then morphed and finessed into an early August to late September expanding wedge pattern. I'll speak more on this pattern shortly, but I wish to point out how this is all, in turn, leading to yet another pattern, a monthly key reversal up we saw in August. Thus you can see that there was not only a lot concentrated in that 46.82 to 51.48 area, but that each pattern had a link to another, and together they helped ride prices higher. However, at the end of September, prices turned south and went back into their respective patterns, and there were therefore no potential topside targets for the large ascending wedge pattern. However, the move down, though hesitating, has given us some new potentials for the breakdown below the early August to late September expanding wedge pattern, plus another possible pattern. In the expanding wedge pattern, my thoughts 3 weeks ago were, and I quote, "I choose to regard the action more as an original very steep bull channel rather than a true rising expanding wedge pattern. This is purely because of my natural conservative nature," I hasten to add. So, we may have a potential down to the 45.65 zone within a fairly free zone between the middle time below and the rising short medium moving average above. I am not in love with this pattern, this idea, and I would retire it in a heartbeat if I thought it was inappropriate. And that's the end of the quote. In the time since I've said this, we have seen prices head lower and late last week break down below the zone around the green short medium moving average, currently at 47.99, and the July high at 46.82, and finally reached the potential at 45.65. I also said the following last week, and I quote, "There is the possibility that the last 2 weeks, so that's now the last 3 weeks, that the last 2 weeks, 3 weeks, may be forming a bear flag or bearish halfway hesitation. But in this we'll have to wait and see. Just be warned in case it does," end of quote. Well, since then, the opportunity to become a bear flag or bearish halfway hesitation has solidified, and I can lay out a possible target X below for such a pattern, down in the 42.80 zone. This is all very well, but first prices have to crush the support at the dark blue middle tine and the bright red lower trend line and the mauve medium moving average. I see more issues when the prices actually become stretched down at the recent 50% Fibonacci line at 43.73 and the April 2024 high at 43.38. But we'll see how things develop.
Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Service International Limited. And here comes the final important bit.